Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that just sea of red across the crypto spectrum here. We do see major listings from Coinbase where, basically we only have a couple speckles of green on the daily. Guys, let's go ahead and jump over to the charts. We do see that Bitcoin did have that pullback that I was suggesting in the last video. And lo and behold, what was the area that we were looking for? We were looking for 20,000. 300, 20,500, and we ended up at 20,389. So, guys, the Alpha Fam is just killing it. I mean, we are just out trading the market, guys, and just proud of all of you who have stuck through the thick and thin. Guys, we did, of course, have a bit of a rising wedge kind of formation. These things do have a measured move towards a peak there, but, we are seemingly finding a little bit of support. Not sure if this is going to be able to translate on the higher time frames or if we have a further push down. I'm going to take a look at the 12-hour, which just closed recently. So the numbers I'm about to put on the screen are not valid. We just want to see, did it hold? And yes, it did hold my 12-hour projection from last night. So this morning, we were waking up and we're seeing that Bitcoin did hold the current momentum for the 12-hour. Now, this is going to lead into the daily, which is going to close this afternoon. So I'm going to take off this old news here, right? This is just from last night while we were sleeping. And let's go ahead and put the daily on. Now I can jump over to the daily chart to show you, what that looks like over here. And you can see that essentially we are holding on to the current momentum, and we're not in danger too strongly of losing our momentum unless we get to about $20,090. Okay, so in 9 hours we are going to want to at least hold above $20,090, preferably above 20,582, just for this kind of general continuation. And if we can hold above 20,675, then there's a good chance that we can just kind of have a little pop up here to perhaps our daily pivot, which is around 21,377. And if we're able to get above 21,377, then we are going to be biased in the upward direction. Now, until we get over that level, bias is going to be somewhat to the downside because any volatility spike could just send us down, right? And we are in danger of these EMAs on the 12-hour of just pushing us all the way down to the 9, and then that could easily squeeze to the 21 down here at 19,000. But personally, what I'm looking at is price action being between the 4 EMA and the 200, and I'd like to see a nice pop off of that. We did get something out of that similar type of squeeze where we did pop all the way up to 21,647, and if we are able to hold the 4 EMA here, then maybe we could do that again and then kind of launch off of this, clean volatility should we have a volatility spike. So for the daily, which again is what we're analyzing, we do see that the volatility has maxed out. We're now about to enter a new phase of volatility. This could have one more push to the upside, but there's a little room here for that. But typically we do see these things start to just spiral over. So could we get another pop? It is possible in our current orientation, and so I wouldn't put it past us. Maybe something to 23,000, approximately in that area. But right now, we're just going to be on watch for pullbacks because often when we have a breakdown, there's a first wave and then there's usually a second leg. Okay, and one thing to keep in mind is that on the CME chart, we didn't really fully fill that CME gap when we did pop down here. So for the professional exchanges, there is still this open space. I can drop this open space box down here, and you can see it's around 20,450 all the way to about 19,990. And then, as I was saying in the last video, this is really where we want to hold. because that's where that nice support is on the left. And so if we could just come down just a bit more, fill that CME gap, and then go on our way, I'd be pleased as punch about that. Let's go back over to the 24/7 exchange, because of course, we are looking at this a little bit confused setup right here. Of course, the 200 is very difficult to break through, but you really can't fade this bullish orientation, right? If this does end up being the low, then we just made a bit of a higher high yesterday night, and then also a higher low today. So we can't necessarily fade the rip until it's totally worked out. And oftentimes, when momentum is going your direction, you can just get these crazy pushes. Now, volume is coming down, so we do have to monitor this, and I'm sure some of the other indicators are softening, but that's just pretty evident in the price action, right? So let's go ahead and just take a look at, let's say, the next 2-day projection, okay? Let's see here. Let's take off the daily and let's go to the 2-day, because of course the 2-day and the 3-day and I believe it was the weekly, they all ended bullishly yesterday. But we will start to have new closures in another day. So just want to see where we are. Yeah, see, we're above the current momentum for the next 2-day projection. And should we close within 2 days, above 20,674, we're going to be bullishly postured. What can I say? Okay, and we can come all the way back down to 19,665, and there's going to be no issues on the 2-day. Okay, so people can start getting terrified if they want, but just telling you, like on the higher time frames, things are looking good. Okay, let's go to the 3-day. You can see that we have all the way down to 18,200, basically tagging this 21 on the 2-day chart. Let's go to the 3-day chart. Sometimes I have a bad habit of looking at the 3-day on the 2-day because they're just so similar, right? They just look almost identical. But of course, the 3-day has a little bit extra buffer room because it does close at a later date. These numbers should be tightening as we get our next set of closes. They're always lagging the shorter time frames. So really, we're just looking at the daily here. We want to close this afternoon above 20,675. You may have missed your chance to buy in if that holds, and then the 2-day takes over and this thing rips somehow. But otherwise I do expect this thing to try to fill in that CME gap, since they've already started filling it in. But it's just hard to say. Guys, we did have some bad news in the market. Of course, yesterday I was telling you about how the Bank of Japan failed to do the right thing in the previous day. And so, that does allow for the US dollar to perhaps find its base and continue to pump. But this thing has been very weak. So whether or not the dollar can actually do that, on the 3-day, it doesn't look too great. What we can see is we do have the 200 on the 3-day just right there, however, and that would likely provide some solid support on the 2-day. You can see that we're underneath the 200, so that's interesting. And then also on the daily, we're well under the 200, and we've already retested it. So again, this thing could just continue to slop over, and maybe the markets have just decided that it's time to be working on other assets than the dollar strength, and maybe inflation is getting under control, and so we'll see. Now, could we have, some market conditions that look favorable, but they're caused by bad things that are going to later come in to bite us on the butt, like, recessionary forces? Yeah, but does that, fade the fact that we could still have a pump? We're looking at these things very closely, okay, guys? I mean, if you look at where we wicked to here, and I had this circled, but you can see how we wicked here yesterday. It's really right at the bottom of that support area. And wow, we actually wicked right here to the top of the support area that I had, and wicked right here to the bottom. So we fulfilled that, I've had the zone marked off for probably a few months now, and we literally wicked right to the top and wicked right to the bottom. So we are a bit of a free agent in this zone, sort of like this area over here, and it remains to be seen if we put in one of these type of bottomy structures right here and just find our way back up. That could be devastating for markets, especially if we reclaim this diagonal here, which has been long-term support. If this was just a fake out to the downside, and if the Bank of Japan failed to do what they needed to do in order to continue to push the dollar down and support the yen, then it could be game back on for the US dollar, and whatever happens with Jerome Powell's meeting, they could be more hawkish than we thought, and they don't have to actually do anything unexpected with interest rates. They could just talk hawkish, okay? And, as a matter of policy outlook, and that could end up tanking markets as well. So, guys, the stock market really is still borderline, and we are in a delicate place. I personally wouldn't think that, all of these late bulls, should be jumping into the market right there, right at resistance. That's never a good thing to do. But a lot of people did try to get bullish. And let's see, something's going on with my chart here. Not sure why. My line is all messed up, but we can just readjust that. And you can see that essentially we conked our head on this line that we've been conking our head on quite for some time. And, is this an overreaction by the markets? It could be. It could be. We are starting to have a little bit of a roundedness on the bottom here on the Nasdaq, and maybe we get a push, and maybe we could even come up to test the 200 or break above it or do something crazy. I don't know. It's possible. The S&P 500 shows us a little bit of the same picture, but of course, we did break that trend line. And I do believe that the majority, or almost 50% of the market, is actually above their 200 EMA. So things are looking okay. It doesn't look terrible. And we could have a pump off of the dump that we had here as we have this little supportive area on the S&P 500. You see this bounce right here, see this rejection right here, this bounce right here, rejection right here, bounce right here, right? And so, we could be coming down, and maybe we're going to have another bounce off of that kind of little line that goes across here. And maybe that can carry us across the finish line. And crypto would be a beneficiary of that. Now, it remains to be seen whether or not we take out this wick and whether we can put in some type of other type of bullish formation. This was obviously a bearish formation, but if we could put in some type of a bullish formation like this broadening descending wedge, which breaks to the upside, maybe even has a huge bull run that comes out of it. It's just a hypothesis. I'm not saying that that necessarily will happen. It's just a hypothesis. Should we take out key levels like 4,200 on the S&P 500 mini futures? And we also have the potential to do this inverted head and shoulders, which I showed you last time, where we could also have almost the exact same target, right? And of course, a failed head and shoulders would have a target for a rejection all the way down to the pre-COVID highs. Okay, so that would essentially give us a lower low based upon a measured move here of a failure. Assuming that we get into this area and then we fall over as a kind of a fake out, the market could take that, pretty seriously, right? Let's see, Monday has already passed, and this thing is just moving like molasses going sideways, right? We do have to be aware that if we do make a lower low, we'll still be in a pretty good downtrend, and so, you know, even lower targets could be on the table. But should the market find bullishness, and if, barring something really weird happening in the economy, maybe we could go on a run, make a lower high, I'd call it a technical double top, and then get a rejection and try again for these lows. Should there be bad news later on in the year, like a enhanced recession, or a million things that we know already that could go wrong, right? I'm not going to rehash that in this episode, but that's what I'm looking forward to here, guys. Maybe a run. So I'm open minded to it. A lot of people are trying to convince me to be super bearish, but I can't be super bearish um, as long as we're having kind of a bottoming structure, okay, and where there's the potential setup for bullishness. I simply can have conditions, and then we would reach validations, right? And then a confirmation would, of course, be with the move actually continuing to go. But could we continue to have a pullback? Perhaps as the VIX is spiking, making trading a little bit more difficult than it was, the day before. Yeah, I mean, the VIX is popping back up. And so that was really, really, really a great opportunity to perhaps buy, some type of future puts or whatnot. But rising above 20, we do get perhaps a little bit more difficult to trade as time goes on. However, we're still in a very good trading zone. So I don't feel bad about our current setup. This thing could easily just go sideways and we could still have good trading days ahead of us. Of course, this is directional dependent, so we do want to continue to cut down for the best trading. And of course, as we push up, that's what's really going to make it hell. And should we get into the hell for trading zone, then it's just like, the ninth level of hell or whatever. But guys, again, I'm not 100% sure what's going to happen today. We did have a lot of weird news. On top of the Bank of Japan news, the FBI and Justice Department, announced that they were shutting down some type of, criminal organization that was operating through a Russian crypto exchange, right? Genesis, that company related to just so many projects in the crypto space, so much of the money behind it, including the Grayscale Bitcoin Trust, they announced a bankruptcy. So how is that going to affect the market? I think there's a lot of potential hiccups, that could be coming towards us down the line. And then, of course, just in the traditional markets, the consumer savings, were basically reported to be very low, and earnings came out for the holiday season, and they were not great. Okay, for winter 2022. And so that does suggest that money is going to be tight this year, which does kind of enhance the risk associated with a possible deep recession. Okay. Now, that's what Jerome Powell wants because he obviously wants to fight inflation. And the less money people have, the less money there is in the system floating around, then the less inflation there will be. And so inflation will be fought. And so we're kind of getting to that point where there's a little bit of enthusiasm in the market because inflation is being fought. But we really haven't dealt with that other side, which is the recession. Okay. And so who knows? Maybe we got a rally in the meanwhile, and then when the recessionary forces really hammer us, we retest our lows or something. Okay, I've covered this in the macro episodes. Not going to rehash it. Let's just go over those key levels to watch. Which for Bitcoin is, today we'd really, really, really like to close above 21,377 in order to give us that best chance to continue pumping. We'd like to hold above 20,675, which we are currently at. Okay, so we have been pumping. We were well under there, but as long as we hold above where we are right now, we should maintain that momentum to the upside. Even if we go sideways, we're not going to have lost any momentum, and that's going to go along with, of course, the MACD and some other these other momentum oscillators that will show some type of positive movement, hopefully above 20,582, and then we will lose considerable momentum under $20,090. Those are your key levels to watch today, guys. Hope you're having a great one, and that was your alpha. Stay safe and happy trading.